where we're going to be exploring the insurance industry in 2015. And we have Adam Samie, who is the CEO of Line of Africa Insurance with us. Adam, it's always lovely to have you. I mean, as we talk about an outlook for 2015, no doubt you are weighing domestic and global factors that are going to be playing into the sector. Give us a sense of which are those moving indicators that you're keeping your eye on.
Okay, well, in South Africa, if we just turn to South Africa, we have a low inflation environment. We expect that to be maintained during certainly the course of 2015. We have low economic growth, which we see as a very negative factor, because the insurance industry, the short-term insurance industry, follows very closely on the economic growth of the country. So that is a problem. The constraints that we have in the labor market, the dislocation of social unrest, service delivery issues, all of those things impact quite negatively on us. What we also see turning into the global markets now is, export markets, traditional markets are also struggling economically. So we're seeing a lot of difficulty for manufacturing, to expand, and then the overall influx of weather patterns, changing weather patterns, leading to widespread flooding. We just see them out now in Mozambique, Malawi, and fortunately hasn't really hit South Africa, although there's been quite a lot of localized flooding, recently. So those are some of the negative features. When we then look at what are the opportunities, and again, a low inflation environment, lots of new capital flowing, particularly in overseas markets, flowing into the industry, mean that for good clients that look after their risk, manage their risk quite well, look at their loss history and claims, good clients can expect good ratings still and enjoy good premiums, and also enjoy wonderful service, because regulations also move us into that sector.
Adam, let me move on to something now, because you've talked about all sorts of things, and I noticed it was the anniversary of those appalling Langsberg floods, and that extraordinary weather event that cost so many lives. And I thought of the insurance industry when I saw that it was the anniversary. But never mind all that, the short-term insurance ups and downs and the long-term insurance trends. What about competition? Competition is something you must be worried about.
Competition certainly worries all of us, but competition is good for clients. And so as we all look at we're all competing for better clients, because better clients manage risk better. It means fewer claims, it means lower cost, administration costs, and so we can then price that back into those products for those clients. For the clients who don't enjoy that good a loss history, unfortunately they will feel the sting of market changes in the full context of everything that I've just spoken about.
Okay, Adam, short-term insurance, there's, and we've seen it with Santam, a significant investment portfolio that protects them through the volatility. Yours is a fairly recent company, but you've managed to build that up over time. Has that helped you go through some of the more difficult periods, especially in low inflation environment, lots of competition, your premiums are under pressure?
Yes. Well, regulation in South Africa has moved into the G20 regime, which is risk-based. And so one of the things that weighs heavily on an insurer in terms of where it invests its portfolio is what is called the capital risk charge of the equity markets. Equities are volatile. And we've seen through the financial crisis, sometimes up to 50–60% of an insurer's investment portfolio just wiped off the boards in a couple of days. Nowadays, that carries a significant risk charge. So what insurers, through regulation, is actually encouraged to do is to move into less risky investments, which are government bonds, cash, near cash instruments. And unfortunately, those don't pay as well because they're safer, right?
I want to interject that because I think there's another element to what you've just said, because as you move into safer investments, you're also leaving behind the underserviced market, and most times this is the low income bracket. So then if you look at national policy, we've been talking about a drive towards financial inclusion and insurance, in particular microinsurance perhaps being one of the vehicles to achieve just that. Are we then losing sight of that very ambitious goal that we've set for ourselves as a country?
I think that we need a different understanding of what that means. The underserviced market in the past of what we've talked about is not the market that microinsurance is really directed at. And so what we see internationally, that we have very robust public-private partnerships where government gets involved to cover some of the more social elements, and the private sector gets involved to bring efficiencies and to broaden the access base for those clients.
Adam, it's always a pleasure having you on Business Tonight. A very big thank you to Adam Samie. He is the CEO of Line of Africa Insurance.